Greetings. My name is Rino Mapetere, and would like to discuss the treatment of share transactions for tax purposes. And this is largely for the preparation of the coming IAC ICAS examinations in January 2025. So our learning outcomes. First, we need to anticipate the different types of share transactions. Here, I need to quickly warn candidates that we can never learn every possible share transaction that can be consummated out there. But what we can do is just to anticipate a few different types of transactions, and it is from there that we will try and use those few examples to show you how, when faced with either a completely new type of share transaction you've never dealt with before or similar, how you are then supposed to create a solution or solve a problem. We would like to understand the components of these different types, this sample of types of share transactions. We're saying, yes, there's share options. Yes, there's certain types of share-based payments. But we need to drill down and say, how does a share option work? How does share-based type payments based on indexing a share price, how do they work? What are the components? Breaking that transaction down leads us into coming up with the proper toolkit in terms of the principles that we're going to use to solve the problem. The next thing that we want to learn is defining the problem. Remember, the key skill that IAC is trying to test, one of the most important things is problem solving. Candidates tend to say, no, look, Jana, problem solving is not important. We just want to get to the answers and so on. But in the process, sometimes this is how you actually then miss the point. Because an examination will never come through as, how do you solve problems? We give you a problem, vary the components of the problems, and your ability to pick up these variations and piece together a good solution is the problem solving itself, and that is what you need to learn. So it's a very abstract concept, but it is something that you need to actually learn, because that is what is going to make you go through the IAC exam and the APC examination as well. So let's be very good at breaking down what is the problem. What have I been asked to solve? We'll go through then going through the actual solving of those problems. Income tax, value-added tax, and capital gains tax. Now, let us go through the different types of share transactions. As I alluded to earlier on, that we will come up with a sample. Let's look at share options, just understanding them, and let's not deal with the text yet. Candidates often say, Mr. Gino, just go and show me how you calculated this, that, and the other. And in the process, they then miss how to come up with that calculation. It's actually largely residing in understanding the share option scheme itself of the day. There's so many different types of share options. Entities will vary, or taxpayers will vary their schemes. After we've understood share options, we want to move into what if you have someone paying for supplies that they received by way of shares, either new shares or they're taking from their treasury shares. How do you deal with that? What are the tax implications of that, or tax treatment? What of types of shares where a person is acquiring third-party shares to then go and pay for those supplies. So you say to your supplier, thank you for the goods or services that you've supplied, and in return, I will pay you by giving you shares in entity X. In item number 2 above, we're saying, thank you for giving us goods and services. Here are our shares, whether we're issuing them for the first time or we're just collecting them from Treasury. And then there's another type of transaction that involves shares, which is where a transaction, maybe between, again, a supplier has supplied us with goods or services, and instead of giving them shares or pay them through, we are saying the amount that we will pay you, Mr. Supplier, is going to be determined by what is happening with another, what is happening with the price of a share, be it our own shares or other shares. So obviously, some of these transactions require very strong share markets, so that the valuations and the transparency, the consistency, validity of the prices is not questioned. But you also have, in all these types of share transactions, you also must be cognizant that some of them are happening with employment services. So the employer is dealing with the employee, and the service that they've received is employment services. That's a special space, because it brings in rules around remuneration. It brings in any specific provisions around some of those transactions, like share options. But remember, there's 81F about fringe benefits or advantages. You also have 81B. So you've got the definition of remuneration. So it's, what's important here is to look at that detail or additional element of remuneration or employer-employee relationship coming through. Right. Let us try and understand the components of the different types of share transactions. Let's start with share options. With share options, the first question is, why would share options be done? Why would two parties come through and do share options? Share options normally are used for the purposes of motivating one party is being motivated to contribute to the value of an organization. So you get into an option, and that option allows the one party to acquire shares at a later date for a fixed price, for this person who is buying the shares to benefit. Obviously, what is then required is for them to contribute to the value of that share, so that they buy the share at a discount or at an amount which is less than its true value. And that's how they will benefit. That's why. That's the motivation. How it works, I've already dabbled into that. At a certain point, two taxpayers come through and say, we would like to get into a contract. In that contract, taxpayer X is going to be selling their shares to taxpayer Y in the future at a predetermined price, at the option of the buyer, which is taxpayer Y. That's how it works. And we've already answered why you would do that. You would do that simply because if we fix the price, let us say hypothetically at $10, you will be allowed to buy the shares at $10. What is the price now? Let's just say 8. You will work hard if you are an employee of that organization to make sure that by the time you're exercising the option to buy, that share price will be favorable to you. How? If the value at the point of buying is now in excess of the exercise price or the price that you're going to buy it, you have benefited. It is as if you're buying shares at a discount. So what can you do to increase the price of this share? Contribute through your work as an employee to make sure that the value of the entity rises and therefore the share price also rises. That's how it works. So you've got phases where you contract first, and this is the date of the contracting date. We can also call it the grant date, right? And then there's a period between the grant date or the contracting date and the date in which the option can be exercised. In that period, we call it vesting. You have to achieve, you have to demonstrate first before you can exercise that option. And that period is called the vesting period. And then comes the vesting date, first date which the buyer can exercise their option to buy. Subsequently, this buyer, if they then buy, they may then turn around and say, now I am selling to other third parties. Again, it will be very important to just understand how that transaction works. So what have we done here? We've anticipated one of the transactions that examiners may deal with. This is a deliberate approach because the danger is sometimes just to do one question that was done at ITC and then close off and feel as if I now know share transactions. But there's so many different types of share transactions that can be examined, and we want to be able to anticipate them. Right. So the share options can be directly between the employer and the employee, or there can be an option that goes via a trust. The employer first puts the shares in a trust, and the scheme allows the employee to buy the shares from the trust. So already that's another variation. So what am I saying? Please, when you get into the exam, the moment you see share options, do not immediately think about the solution, January ITC 2024, and then you're thinking, let me make sure I do what was done in that solution. You've got to say, what are the components, what are the issues before you today, and then deal with those. So let us look at the other transactions. So here we had just looked at share options, but other transactions, number 2, you can have a share issue to pay for supplies, new issue, or issue of treasury shares. Here, what are the key principles you're looking at, or the timeline issues before we even look at the tax principles? You're looking at contracting. You need to look at the essence of the contract. What is the one taxpayer receiving? What is the other taxpayer supplying? And how are the shares coming into play? So how many transactions do you have there? You can discuss, should you be able to discuss share issue on its own? Should you also be discussing the payment or the supply of goods or services, whether for the purpose of trade and so on and so on? So you've got to be clear on what is happening there. Then the payment element is what I'm saying. In that contract, you've got to be saying, so who is paying who for what using shares? Another type of share transaction is where third-party shares can be acquired for the purposes of paying off a supplier. So here you have to be clear that between the supplier and us, or the taxpayer company, what is the transaction there before we go to the mode of payment? And then you need to go and look at, okay, this whole acquisition of shares in a third party entity in itself is a transaction. And then now the use of this investment in shares of entity Y to pay our supply. Understanding all those, breaking down the components of the transaction is your first step towards then creating a solution that will earn you marks. Another type of share transaction is where there is a supplier arrangement, or an arrangement of suppliers of goods or services, and the amount now is determined by the price of a share elsewhere. Then lastly, I would argue that I would say we need to look at the different types of supplies, including employment services. Let us move to understanding the different types of required. You've got to understand the problem that you have been asked to solve. Yes, you've been given context in the scenario. This is what happened, so and so supplied this and that. But what have you been asked to solve? So that's in the required. First, you can be asked, there's that verb. You've been asked to discuss. Discuss with supporting calculations, or just discuss. Or calculate with brief narrations. This is very important because it helps you to scope what to include in your solution or what not to include in your solution. It helps you with checking on completeness of your solution. So a lot of students struggle with, Mr. Gino, do I go straight into just giving the conclusion? I've done so many ITC questions and they don't seem to be doing this whole principle. Okay. So the reason why those issues are arising amongst the candidates is because the candidate is just trying to say, I just want to know how the answer is going to look like. You can't. You cannot try and just have the correct answer before you get into the exam. The way the solutions, those sample solutions, are not the Bible, and they do not entirely reflect everything that was considered when you were being awarded marks. When you're being awarded marks, what you need to be good at, especially, let's just take the discuss type question. You need to be good at telling the examiner that the key issue or the principle at play is this. You get a mark for that. You need to demonstrate to the examiner that this is how I have applied that key principle that I have identified to this particular problem. You get a mark. If you also then go on to conclude that therefore this is deductible or not, this is included in gross income or not, if you correctly conclude, you also get a mark. So normally the conclusion mark is actually a bonus mark. In other words, you can totalize before you even get to the conclusion. So this is very important because candidates tend to want to study in a manner that says, I want the IAC style. Tell us how they are going to mark. And this is what I'm already telling you. That the way it is marked is, it is a problem-solving assessment. It is a critical thinking assessment. And the only way they are going to assess that is to look at what you have built into your solution when it comes to the principles, identifying the correct principles, applying them correctly, and concluding correctly. So the sample solution is not to be studied from a perspective of saying, I just want to do it the way IAC did it. Because if that was going to be the case, a lot of the candidates would not pass. Because if we were marking based on this is what the solution says, this is what the student has said, then a lot of candidates might not even pull through. What we mark is to see, have you correctly identified the principle? Have you applied the principle correctly? And have you concluded correctly? It means you are thinking critically, and it means you are able to solve the problem that has been put before you. So just tips there as you study and prepare. So scoping your discussion is an issue. Here, bring in everything that you are seeing in the required. First, what I've identified above there, are you discussing, are you calculating with brief narrations? But also, look at your mark allocation. You cannot be dealing with 10 key principles and doing the principle apply, conclude for 5 marks. So your mark allocation is a key guide as to how much am I discussing. It helps you with the selection of the most important and relevant key principles. That is a critical thinking skill. You cannot get into the exam knowing already how you are going to treat the share option because the last exam did it this way. That is not what is being examined. There are a lot of components that are being shifted around for each examination just to see if you are then able to respond to what is in the required. How many marks have I been? What are the key principles? Can I do, let's say it's an allowable deduction question. Should I deal with incurred here? Should I then deal with purposes of trade? Should I deal with capital in nature? Should I deal with all of them? Should I deal with one of them? Should I deal with 2 of them? Which ones are the most important and relevant? And that changes from scenario to scenario. And no amount of past exam papers will help you with that decision making. You have to do it by checking the mark allocation, by making your own assessment of the key principles that you have selected, by watching whether or not you have dealt with the principles or you've just gone for the conclusion. The text treatment. You have to be clear in terms of your required. Which tax treatment are we dealing with? Is it the income tax? Is it the VAT? Or is it the CGT? That is very important. It changes the scope of your solution. In the hands of who? Again, in some cases, the share options is in the hands of both the employer and the employee. So you're going to be dealing with gross income. You're also going to be dealing with allowable deductions. We're going to be dealing with a lot of issues there once it's both gross income and allowable deductions. In the year of assessment, this again will change the scope of your solution. In the one transaction, you can just be said, discuss the tax treatment of share options. And these share options are over maybe 3 years or 4 years in terms of the vesting period. In that case, you are not being restricted to a particular year of assessment. And in the end, you are dealing with it at 3 stages, at grant, at vesting, and at exercise. But sometimes you're told a particular year of assessment. And where the share options are over more than 2-3 years, it's certain, once the year of assessment has been determined, certain transactions may then be scoped out. So if it's in the year of the grant, you're no longer going to be discussing the subsequent exercise. You could discuss vesting for that particular year. All right. So let's try and look at problem solving in terms of income tax share options. Let's start with share options. As discussed, At grant date, we've already discussed what happens there. For income tax purposes, let's look at share options being between an employer and employee. For income tax purposes, the employer is checking on grant date. They are not yet receiving that exercise price. So there's no receipt or accrual. The employee, on the other hand, is not yet paid. So there's no incurrence at that stage. The employee as well may benefit in the future from increased share price or market price. But that benefit has not yet been realized at grant date. So here, there are no income tax implications for both the employer and the employee at grant date, and the reasons I've already shared. So what is the most important discussion? When dealing with the employee, you will have to discuss the gross income discussion around unrealized gain that may happen in the future. Now, this is very important, the next bit, as we then discuss, because it came through in your solutions for the ITC January, where we'll deal with what can happen on day one. There could be gains on day one and during the vesting period, and we're going to tackle that. Let's look at VAT on grant date. And I've been deliberate here. Instead of dealing with tax head first and then dealing with all the share types, we could have done that. I've done share types and each tax head for each component of each of these share types. This cross-sectional review of these things allows you to look at it from multi-directions so that you are not stuck in the exam, stuck with the solution you've seen before. At grant date, what are the VAT considerations? First of all, this whole transaction is happening in an employer-employee relationship, which is remuneration, and it's excluded from the definition of trade. So there are no VAT consequences. But also, if you look at what has been supplied, are we supplying shares? We are supplying the right to buy shares, right? And as long as there's a transfer of shares, one of the most important things is just going to be those are exempt supplies. And then with CGT, the key question there is there disposal of a specified asset yet? Answer is no. So there's no CGT. During the vesting period, and as I mentioned earlier, there are unrealized gains or losses as the market price fluctuates. In fact, in accounting, I think those gains or losses are actually then recognized in income. But for tax purposes, ideally we would have said, look, these are unrealized gains and let's not include them. One would then argue, but wait, there's an advantage that is being awarded to the employee, and therefore it's a fringe benefit. So you could have solutions that then discuss it. But overriding everything is Section 81S, which is very specific to say when you have share options from an employer employee relationship in terms of that trust, then you need to look at 81S as well. And what 81S is just doing is it's waiting until exercise date. And then it says, what is the gain to the employee? And what's the gain there? Here's your market price, which you should have bought it for. Here's the exercise price, which you've actually bought it for. And the difference is a gain to you. However, the exercise price is also just adjusted for inflation, which may further reduce the quantum of the gain. And that difference is included in gross income. And when it comes to the employer, it means the employer is also, in terms of their remuneration or employment cost, that is the extent of the expense or the loss which they would want to claim. They could have sold for a certain amount, but they have given up that amount in order to benefit the employee, it comes at a cost, and that cost is an allowable deduction. At exercise date, I've already mentioned what happens here. Section 81S kicks in. There's that remuneration story we're discussing. And all those unrealized gains or losses have now been realized. VAT, again, look, these are exempt supplies. If this was between employer-employee, so there's no VAT because it's excluded from the definition of trade. CGT, this is, the question then becomes, although they are marketable securities, but how were the shares passed on to the employee? The issuing of shares is not a disposal of shares, and therefore no CGTA may arise. Remember, CGT arises only when there is a disposal of shares. So let's look at the other share transactions which are not share options. You could have a remuneration of employees by simply issuing shares, not even giving them options. And in that transaction, you could use your own shares or you can use other entities' shares. Either way, on the part of the employer, there is an employment cost and it is deductible, it is remuneration. On the part of the employee, it is gross income. And the discussion there will be around the amount, how much. So the acceptable value of the shares will be what the candidate will be discussing there. Sometimes you have a transaction in which the taxpayers are indexing the price of the shares there. So here, for tax purposes, the transaction is normal. It's just the amount for tax purposes that would need to be determined based on the indexing of other shares. There's I would like to discuss the principles there for remuneration, allowable deductions, gross income, general principles. I've already discussed that, and it's with an income tax focus. When there's no point in doing VAT and CGT, given that there's no disposal of shares, and also given that they're exempt, share transactions are exempt, or that in some cases they're done in the context of remuneration, which is excluded from the definition of trade. In approaching your exam, you must understand the scenario. You must understand the details of the transactions. You must understand the required, the verb. What are you being asked to do? Discuss, calculate. You must understand the year of assessment, the taxpayer, the tax head, the allocated marks. All these things help you to determine your answer scope using the understanding of these things and to create an expectation table of what you want to cover. Thank you very much and enjoy your preparation for IAC.